Good morning. We are live. I normally have to give it a few seconds, few minutes for people to actually join the stream. The open we have here, it's kind of a tight open, tails on top of these bars, right at the 5,900 number. Not too far from the close of Friday. The market will probably spend some time in this area today. Hey, good morning, John Doe. So market opened right around 5,900. There's no news events today. There's really no news events until Thursday. So I'm really not expecting the market to have any like big moves until Thursday. I feel like it's going to stay kind of quiet. There's probably going to be sellers in this area at the moving average, Friday's close, especially with these first three bars. More of a limit order market. People selling above bars and buying below bars. We are on a buy on this third bar here. So this third bar is actually a second entry. So the first bar is a bull bar. The market went above it. So it was a first entry, and then pulled back here. And this bar 3, this is a second entry buy. And so we're actually on that second entry buy now. This is the daily chart. So it's it's been a choppy. Last week was kind of a choppy week. Each bar was just reversing the prior bar. Now, it- so we're above the moving average, and the market had been moving up strongly through here. Now, Friday was this bull bar. Um, the market probably will want to get above that to see how many buyers are there. I'm not sure how much follow through buying it'll get once it gets up there, though. After all this sideways movement, and we're way above the moving average. Yeah, I would expect more sideways movement here. I'm not expecting us to get strongly bullish. We're far from the moving average. We're not getting very good price action. So probably today and this week will just be more of this, more sideways movement. Crude oil. This is the crude chart. It's had a big gap up today. It's the gold daily chart. It also had a big gap up. Gold's really been really strong the last few weeks, few months. All right, so what's setting up on the gold here is the secondary short that's failing. So this is the first entry short here, and the second entry short below this bar, and that's failing. There's probably swing buyers above this bull bar here. This is the euro dollar chart. Potentially there might be a swing setup and a few bars here to get down to the close of Thursday. Market opened here, came up, tested these lows, through here, came up right there. I've gotten 3 bear bars down. So also we might be able to get a pullback here soon and be able to take a swing trade down. But back to the E-mini. Yeah, so the E-mini, this is a limit order market, so people will be buying below bars and selling above bars and scalping. So they'll be going for like 2 points. Like they'll, like bar 1, they'll buy below it and try to scalp for 2 points, and then they'll also sell above it and try to scalp for 2 points. It goes below bar 2, they'd buy for 2 points. Goes above bar 2. They try to sell, and they get their 2 points here. To me, this does not look like the start of a strong bull trend day. Yeah, I imagine this 5,900 is going to be important the whole day. We can see how it was on Friday. We opened near it. We tested it a couple times through here. This bar came back and touched it. Tested it again even later in the day, and now we're right around it. So I would expect today to be a trading range day that has sort of a midpoint around 5,900. I think what the bears might argue here is that this would be a sort of a double top. So this was 1, and this is 2, and then big bear bar. So if bears were to short here, they're betting that this is a double top. That's possible. This would be double top, and then they'd be able to get a move down. But I think it's better for people to just look for trying to it's better for people to just be expecting a trading range and not trying to do any swinging right now. So with this bar 6 here, this big bear bar, probably a decent chance there'd be sellers above the bar. So people would sell above this at the moving average, try to get like 2 points out of it. So there's probably sellers above the bar. Are there sellers below the bar? I think like some institutions might sell below that. They'll sell below, and in case it does break down here, then of course they made money. And if it doesn't, then they know it's going to be probably be a trading range day of sorts, so they'd be able to sell more higher. You can tell the difference in the gold open uh, today compared to Friday. Friday's first 5 bars were all closing above the previous high. They were all bull bars. And here, so far, you have a lot more overlap. You have more bear bars. So I would expect today to be less bullish than Friday was. All right, so we'll get to see if there are sellers above this bar now, with the bulls testing up to it, if it can get above the bar. Looks like those. Looks like the scalpers kind of front ran it a little bit, so people were selling at the open of the bar instead of above the bar. So once again, probably sellers above this bar, because now we have a bear bar and then a bull bar with a big tail on top at the moving average. So how many people really want to be buying? How many people really want to be buying above that? Probably not too many. There'd probably be more sellers above that. And we'll see, it's testing it again here. Okay, went above it. So if I was selling there, I'd be probably just going for 2 points, which would put us kind of here near the open of the bar. So if I was to sell above that bar, I'd want to be prepared to scale in higher. So either it immediately goes down and gets 2 points, or I would sell more higher below a bear bar and try to get out, either break even or on or break even on the first entry. I will just point out that bulls that had bought above the second entry on the third bar here, they are still in the trade. So, if they bought here, they put their stop below. They've not been stopped out, and they've had really no reason to get out yet because, like this bear bar, the market did not go below it. So if they were on a swing trade here above this, I did not see a reason that they'd actually be out of the trade yet. I'll be right back. All right, I assume that scalp trade would still be on. I assume it didn't come back for to down here when I was away there. So the bulls from the open, they have moved the market up, but they're not as strong as they could be. We have tails on tops of these bars. We have a big bear bar in the middle. This bar here, this most recent bar, it closed below this high here, so it closed below this breakout point. So they're not as strong as they could be. There should be opportunity to be able to sell more higher. looking at Bitcoin, it's had a few days where it's broken out above this trend line. This most recent day, it's pulling back a little bit. Probably buyers that have bought through here, or like had bought this close, would get out below this bear bar. And then if there's another setup over here, then they would buy again. But probably if the day closes like this, they just go ahead and get out below that bar on Bitcoin. So the gold here, it's forming this triangle. Yeah, so we have one bar, the next bar is inside of that bar, and then the third bar is inside of that bar. When you get a triangle, the first breakout normally fails, so it'll break out, come back to the apex, and then from there decide which direction to go. So this is the better close for the bulls. So why is this better? Well, it's closing above these prior highs. So it closed above the high of the recent bar. It closed above this breakout point here. So that's better for the bulls. I don't think it changes the fact that this was a bad start and 5,900 will be an important price. Kind of like on Friday where, we had this opening range and we did end up trending up for several hours, but then look at this deep pullback here. Pulled back 15 points there to come back into that range, and then later in the day pulled back again. But now that we have broken out, we have a close above these highs here. I think it's a little bit better now to start looking for swing trades. Before I think it was best to just wait unless you were scalping with limit orders. But now that we're kind of outside of this range now, we can probably get more directional movement. So testing the close of yesterday. This is a good reason why when you're doing scalping, like limit order scalping, like selling above this bear bar or this bull bar, why you should trade small is because normally your plan will be that you want to scale in, and if you're selling here, selling more higher, you have to handle these bars like this. And if you're trading, size, if you're trading too large, then you're just gonna just ruin your account. You're gonna make mistakes. You're gonna be trading too large, be losing too much on one trade. If you're gonna do any sort of limit order scalping, I would suggest trading at a minimum no more than 20% of your normal trade size. So if you normally trade 10 contracts, then I think you should be scalping with 2 contracts or 1 contract or even less. Possible wedge is forming. So a wedge is 3 pushes, and this would be 1 push, pullback, second push, and a third push. So I would draw on that wedge something like this. So if a bear bar forms either here or on the next bar, I'd be interested in getting out of my longs below that. Half of all moves on the open reverse, and we're still in the open, and this is still a move up. So this could end up being a wedge opening reversal, and then sell off down to these lows or lower. One thing that was never really sufficiently tested, on Friday we had this big bear bar, and it's funny, at this point, at this moment down here when it was at the very low, I was saying I'm almost certain that we're going to go below the low of yesterday. So I was almost certain we were going to get down to this red line, and we never did. We really never tested this close any. There really was never any relief for the bears that sold here. So I think this close would be an important level to test, like this low. So I think this red line would it'll be a magnet. So if the market fails to go higher at some point, either today or this week, then this line would be an important price for the market to test. So with that in mind, I'll just try to think about it either today or later in the week. If there's a possible swing setup to go short, then I think that'd be worth taking. I'm trying to sell for down to get to down here. So let's look at this. If you had been buying anywhere in here, now you're starting to see we have this 3 push pattern. You had this good looking bull bar, but then the fall through was bad. It was a doji. And now it's still early on this bar, but we're getting a bear bar. So bulls, the buying is not as good as it could be. Bulls are hesitating at this breakout point. Let's get back to gold. I was talking about the triangle here on gold. So I think triangle, probably this bull bar and this tail acts as the breakout. So now it's pulling back to the apex of the triangle here. So now we're probably going to have more of an attempt to break out in either direction from this triangle. gold has been so strong the last few weeks, the last few months. And whenever you have a market that's been rallying very strongly, it could be, like the the mini, the U.S. stock indices. Generally, they're actually always sort of rallying strongly. If you look on a daily or weekly chart, if you pull it up, it's almost always they're going to be kind of tilted up. So, and when you look at what happens on those charts, when there's a pullback that touches the 200 moving average, 200 moving average is usually where the buyers come in. So, like on the E-mini, I believe it was let me just try to pull it up. Weekly chart. So you can look at this sell-off that happened in 2022. So it went from these highs, we sold off. So you can look at this strong rally. Then once we sold off, look at where it got bought at the 200 moving average. And my chart doesn't let me go back far enough, but I believe the same thing occurred down here on the COVID crash. So when you have like a rally on the daily or weekly chart, and then it pulls back to the moving average, that's usually a good place to buy at. So for gold, if gold pulls back to this 200 moving average, I'd probably try to get long at that moving average. All right, wedge opening reversal. So if I was long here, I'd definitely be getting out below that bear bar. And also, this is going to be a chance for the scalpers that sold above here to be getting out. And yeah, so there they go. So if they were going for 2 points, now they're able to get out. So, not expecting today to be a strong bull day. This is a poor open for them to have a trend day. So after a wedge, you should expect 10 bars and 2 legs down. So this is probably the first leg, and then we get some sort of pullback, and then a second leg. can see this bear bar has now become the largest bar of the day, and my bet would be that that's because of all the bulls that had to sell out of their longs here. You know, I saw this wedge pattern forming. Another way to look at it is we have this resistance point. And so this was kind of a critical area the bulls needed follow through on for this breakout to occur. And we have this high breakout is happening, but it needs follow through to continue. And the follow through was bad. It got a doji bar, and then even worse, got this bear bar. So bulls failed to break out above that level, and then they were selling out of their longs here, which is what's creating this big bear bar. And this is big enough now that I want to see how the bar closes. We still have a minute left, but it's big enough now that I could foresee. I definitely could foresee this breaking out below here and getting another leg down below that. So I would not be interested in buying below this bar 3, the low of the day. Yeah, so bear is breaking out pretty strongly below that low. So I don't think today will be a bull trend day. My suspicion is that it won't be a bear trend day either. So I think my premise is still that the open of the day will be an important number, and like this 5900 will be an important number for today. So kind of this area between the open and 5900, market's probably going to be testing back and forth on that level. So we opened, we moved up. Now we're heading lower, and we'll probably at least want to come down to this measure move from the high to the open. Put us down here. And we're close enough there that we might test this big bear bar and the low of this low here. But ultimately, I think trading range day, with 5900 being the important price that it keeps wanting to test back to, kind of like it did here. The market looks like it's trending up, but then you get this deep pullback, and then you get it again here later in the day. So this move here is strong enough that we'll probably get a second leg off of that, as long as this closes as a bare body.
Order submitted.
So we'll go ahead and sell here for try to get a scalp.
Order filled.
I'll just see how I'll go for 5 points initially, and I'll see how the follow through looks on this bar. Three bear bars, all closing below their midpoint. So, two reasons I like selling this. You have 3 consecutive bars like this after a opening reversal. We're probably gonna be getting a second leg down from this. Anytime you do get like 3 bars consecutive strong closes like that, then you normally do get a second leg. So then we also have this measured move from the high to the open, then measured move down, and we also have this close here that's important, and this low that's important. So there's a lot of reasons for the market to be headed down. So normally when I scalp like this, I'll go for 2 points, but I think it's reasonable to try to get more, so I'm going to go for 5 points here. The only problem with betting on a second leg is that you might have to sit through a pullback before it heads back down. I think this shows you just how many buyers there were, people that were betting on this breakout to occur. They bought here, they're buying here and here. and that you got that wedge and a strong bear bar, and they just completely gave up below that, which was what caused all this. So 1 minute left. Bulls are trying to buy it up to give it worse follow through. So they're trying to buy until they close and get a doji or a little bull bar so that the follow through on this is bad to try to prevent more selling down. All right, so now that it's kind of getting a little lower, I'm gonna move my stop so at least I don't lose anything.
Order filled.
All right, so I just decided to go ahead and get out there. It's just supposed to be a scalp, and okay, so market is continuing to sell. Notice it tested this measured move. You'll see that a lot. So when you're having like a first range, like the market will create an initial range, and when it breaks out of that range, it normally tries to double the range. So which is why I put that measured move here. So I'm gonna take this off the screen just to remove the clutter off the screen, but keep in mind the open is gonna stay an important price. So the open and 5,900, those are important. That's an important area. So I'm gonna take this off, but then we can draw a line on. Yeah, I'll still put a line on here to remind us that that's an important level. So now this move here is strong enough for this to get a second leg. And I don't think it'd be like a leg one, leg two. I don't think it'd be something like this. But I would guess that the bears will, after a pullback, the bears will continue trying to sell for at least a little bit lower. And just so you guys are aware, I'll be getting off at 11 o'clock. So if you have any questions, go ahead and ask them before I head off. if you remember during this bar here, I was talking about when there was 1 minute left and it was starting to become closer to a doji bar, and I was talking about how the bulls were trying to buy it up to prevent a bear bar and to give this bad follow through, but then the bears actually ended up just completely piling on into the close, which is what made it close on its low and then provided that follow through to go even lower. So it's kind of interesting to watch like the last minute of a 5 minute bar, because that last minute there's kind of some critical fighting going on, because the close really matters. This bar closed below this low, and that's important. So the bears want to create that to happen, so that they'll get better chance of more follow through. And the bulls try to prevent that, so they'll try to buy at the end of the bar. Wiz No Fear, welcome to the stream. Wiz, I'm not sure when you joined. We did just take a short here. I think we sold here and got a maybe three points or so on a scalp. And I think it's still okay for people to be just shorting this with our targets below like this low here. And the close of this bear bar is important. Looks like we're just about there now. Yeah. All right, so market kind of fell out of bed there. So now it's touched the two targets we were talking about. It went to this low here, and then also got below this close of this bar. So I actually kind of feel like it's reached its targets now. I'm not sure how important it is for the market to keep going lower. I got an email about the Apex 3.0. Honestly, I hadn't read it yet. I hadn't really looked into what would be involved in the 3.0. So I'm not sure yet. I haven't read up enough on it to be able to give my thoughts on it. But what do you think? So now I would be cautious about thinking about selling on the E-mini chart. It's probably okay to sell like above like this bear bar if it stays a bear bar. My issue is we've hit the targets that we were talking about, and when we were up here, we were talking about like this red line would be the target for today or this week to hit, and we've already hit that. Because now what's happening? We had targets below and we got there, but now look, we have 5,900 above. We have the open of the day above. So now we actually have targets. We have the 200 moving average above. So we actually have targets above now that will start acting as magnets. So, and we're far from the moving average. We had this kind of parabolic move down here. So I'm not interested in selling now. I'm more interested in selling when we have these known targets, and I'd rather sell to get down to those targets. But now that we've hit those targets, I actually feel like there's more reason for us to go up now. There's more targets above. Oh yeah, I did see something about the dollar cost averaging. Um, I'm kind of surprised they ever had that as a rule in the first place. No dollar cost averaging. So Wiz, I was planning on being off. I was planning on ending the stream at 11, just so you know. Um, so if you have any other questions, go ahead and ask, or anything you'd like to talk about, just let me know before I head off. So we've had 6 bear bars down. Probably going to be sellers above this bar. But they need to trade small and be able to, scale in higher. Because we are far from these targets, we're far from the moving average, so we could have a deep, like a V-shaped recovery here. So if you're selling here, there is a bit of risk in that. So I think it's good for the bears that they closed below this low. This bar closed probably a little bit better than its midpoint, and it closed below this prior low, so that's still good for the bears. I just feel like we're far from moving average. We've already hit our targets. Bears that had sold here, like we were talking about on this wedge reversal, probably bulls will be getting out, and that's why this bar was big like this, because the bulls were getting out of their longs. I wasn't expecting this to happen, but you can see the bulls that were buying in here. I mean, they just completely gave up, and the bears just completely took over. And it was controlled. I really liked how the selling was strong, but it was controlled. And then you got down to this bar, and it kind of lost control. We're so far from the moving average. How many more sellers are there really down here? Gold's had a bit of a sell-off too. And then for gold, after 6 bars down, I would also expect there to be sellers above this bar. But also look where gold went, and now we're getting to bull. We came right down to the close of yesterday. So this is just kind of how the market moves. It wants to test closes, prior levels, and then reverse. I still think selling above that with the ability to scale in higher would be okay. The euro dollar has basically just had basically no pullbacks. It's just basically gone straight down here. So scammers were using dollar cost averaging and using 200 accounts or with teams of accounts. Yeah. So it looks like sellers above that bar kind of
close to getting their scalp here, depending on how much of a scalp they wanted. Let's look at the 2000 tick chart. Oh yeah, so this is, so you can see the type of scalp I took. We had this consistent sell off after this little pullback has sold into that pullback, sold here, and then just got out for, what was that, about 3.5 points. Now, the way this pullback's looking, it's looking like the bears want to make a second attempt down. But to me, it looks like, I mean, it can go lower, but I just feel like this sell-off does not have much more down left. So opening range, do I use it to trade on a break up below or above? So not really. I don't. The way I would do opening range is there's two ways that I would really like play the opening range. Find the so there's two examples on how I play it on this chart. One, market gapped up, pulled back. We got a first entry buy here above this bear bar, pull back, double bottom, then a second entry buy above this bar here. So we have a second entry buy, double bottom, at the 20 moving average, and we're closing above it. So I would bet on a swing buy above this. So I'd buy here with my stop below, betting that this is the low of the day and that we would trend up for the rest of the day. So the idea would be to buy above that, betting that the low of the day is here. Second example, so this is market opened here, went down once, went down twice, so double bottom. Yesterday was a bull day, which increases the chance that today would be a bull day. So I want to be trying to find the low of the day early. So I bought above this bar, and I sold out somewhere over here. So I was able to ride all of this move up. So that's how I'll play. Like, that's one way I'll play the range. Is I'm really not playing the range. I'm just playing the low of the day or the high of the day. So if the daily chart is in a bull trend, I'll try to look for early lows of the day and then swing up, expecting that I've caught the low of the day. And so this was a good example of that. The second way I'll look at that, now if you're when you're talking about the opening range, I would consider like this, the opening range, like from this low to this high. And then to me, I like to see like a breakout above that and then a pullback and then get like good looking bull bars. This is kind of a special case where they hadn't broken out yet, like this bull bar or this bull bar. They hadn't broken out of, well, it's tough to say, like, is this the opening range here? From this high to this low. This is really the breakout point. So market tries to break out here, pulls back, breaks out again, and then we get, this bull bar or this one or this one. And so these would be good buys for a swing up. So here's your breakout point. Here's like this range on the open. You break out, you pull back, and then you get a couple opportunities to swing by. So that's how I would do the opening in range breakout. So I will do that, and I'll also do like an early low or the high of the day and try to swing like that. And yeah, another example would be like on this day, this high and this low. That's the opening range. We broke out above it here, and then pulled back. And then once you get this bull bar or maybe this bull bar, you can buy above those for a swing trade. You know, so go for break out of that high, pulls back, bears are failing to go lower, and go for 2 times your risk, and you'd be able to get out right up there. So that's how I'd be looking at it. Yeah, so gold, anyone that was able to sell there, I think that was a logical short. You know, they short above that bear bar and got a little bit of a scalp. I should have been one that I'd take. Crude oil is kind of flirting with a breakout below here. You can see it came down to the 200 moving average and the 20 moving average, and now it's failing to go long, so it's possible swing short here to try to test this close of yesterday. E-minis had 2 inside bars. So we have this big bear bar, then the next bar is inside of it, and the next bar is inside of it again. So probably what will happen is the market will try to break down below, it'll fail, and then it'll spend maybe an hour or so going up. When you have a triangle, usually that first breakout fails, and then it pulls back to the apex before continuing to try to go somewhere. So a triangle, my bet is that it'll break out below and fail to go lower, and then it'll probably, kind of go sideways to up for an hour or two and try to come back up. And ultimately, I think even today, there's a good chance it's going to try to come back up and test this open of the day in 5,900. So all right, guys. You guys have a good day trading. I'll see you next time.